Does the hurricane season affect the Florida housing market? That question and many more we're going to be answering today. Welcome back to the channel, everybody. My name is Moses. I'm with eXp Realty. I appreciate you coming back to see what we are going to be discovering today. Shout out to Jason Walter. If you haven't seen him on his YouTube channel, he did a segment about hurricane season here, and I'm sure you've seen a bunch of other real estate agents talking about it too, how it can impact our market. So we're going to dig into that today because me and Jason were going a little bit back and forth on his channel, and I wanted to see what the actual data says for the history of hurricane seasons. So I decided to look into some backwards data from the National Hurricane Research Division. So we're going to be looking into that as well, and then kind of determine to see if the hurricane market, or I'm sorry, the hurricanes do affect the housing market. Other than that, we do have, for the first time in quite a while, a negative month-on-month, year-on-year price decline here in Orlando. We saw at Tampa last month did already cross that threshold. So we're going to be seeing here if Orlando is on the same trajectory, which it looks like it did. So we'll find out where it goes into the future. So thanks for being here today. I appreciate you guys always coming back to check in. Please like and subscribe. I did notice, I started looking at my analytics, and I noticed the kind of one of the most important things I put out, because I want to be more interactive with you guys, is if you guys are looking into wanting to know more information in your county or your city, leave it down in the comments. I want you guys to benefit, find this information more value just to what I cover. And my audience is obviously number one. So if you have anything that you want answered, put down your city down below, your county down below. And then I will dig into some data for you. Make sure you leave what you're interested in as far as like inventory, new listings, pendings, pricing. Leave it down in the comments and I will cover that for you. So again, if you need anything real estate wise, you're looking to buy or sell, I will be moving into the Tampa area and start servicing the Tampa Bay area in January. So give me a phone call, 407-801-1661, and I'll be here to help you out. Me and my team, we have multiple decades of experience, so we can get your house sold under contract. And if you're looking to buy, we'll find you that right home in your price point that you can afford, and make sure that you are living the Florida lifestyle that you're looking for. So let's get into the data. Let's start with Orlando, Kissimmee, Sanford. For closed sales, we are down 3.7% from 2,287 to 2,202. Cash sales, we are down negative 20.6% from 608 to 483. Something tells me about migration is affecting this number from other real estate, higher real estate areas, and now we're starting to get a little bit of liquidity compression, if you will, for cash sales. So we'll see where that goes, but I do think, given the future economic changes that are going to be happening, that this number is going to continue to go down unless there is some sort of stimulus package kind of being reserved. But even then, that's a big package to be given out, so I don't think there's anything going to affect this number. Should continue to decrease, but people are constantly moving here, so we'll see how constant that stays. Cash sales as a percentage of closed sales, we're down negative 17.7%. Median sales price, we're down negative 1.1%, excuse me, from 445,000 to 440. I'm going to be explaining the median sales price, how that works, if some of you don't understand how that works, in a future graph. And I will also be giving my projections towards the end of this video, where I think the housing market's going to go in 2025. So average sales price, we are up 2.1% from 540,193 to 551,695. Dollar volume, we're down 1.7%. Median percent of original list price, we're down 1.6% year on year from 97.9% to 96.3%. Median time to contract, that is up 76.2% from 21 days to 37 days. So this is telling me that we have inventory increasing, and actually I have been keeping track of November's numbers, and it seems like the average right now, I haven't did the actual calculations, but just as a back of the brain kind of calculations, it looks like the average, for new listings, we're at about 1,100 to 1,200 on average every 7 days of the calendar month. And then also what goes pending is about 1,100, sometimes 1,900, some thousand. I'm sorry, either 900 or 1,000. So between anywhere from 900 to 1,100 go pending. What actually gets sold though is about 600 to 700, sometimes 800. So we do see a lot more inventory staying on the market, and then also we do have about 200 to about 300 homes that go back onto the market. So that also tells me that inventory is continuing to increase. So I wouldn't be surprised when I go into these charts with these, it'll continue increasing into the spring season. And I'll kind of give you my my forecast for next year. So anyway, let's continue. Median time to contract. I'm sorry, we already did that. Median time to sale. We are up 28.6%. From 63 days to 81 days. New pending sales were down 3.9% from 2,097 to 2,016. New listings year on year were down 2.6% from 2,912 to 2,835. I do think that the election did have some sort of impact on this number this year around, and I do know that there's people that say they're going to hold off because who knows what could have happened, right? Why put your house on the market when you're not really sure if there's going to be a stimulus package being sent out for next year, right? So if we were going to get that $25,000 increase of people being able to put that down payment, now I'm not sure if that's going to be affecting in 2025 or in 2026. So there could, but for me, if it is for 2025, my thesis is that, well, we might as well just wait to list the home in the spring, so that way, we can get that extra 25 grand. So that's why, in my opinion, why we saw a negative 2.6% new listings for the year-on-year number. Pending inventory, but I do expect this to increase moving forward. So, and I believe not necessarily November, but December into January and February, I think we will have an increase of new listings year-on-year from there on out. So let's go here. Pending inventory, we're down negative 0.9% from 3,000 to 2,972. Active inventory, we're up 41.7% from 6,552 to 9,283. And that is increasing us into a buyer's market. We are officially 44.4% increase from 2.7 months to 3.9 months. So the desirability of demand is definitely starting to shrink. More inventory is staying on the market for longer, and there is going to be a little bit of a shift going on, in my opinion. So Tampa, St. Pete, Clearwater for single family homes. Closed sales were down 9.4% from 3,012 to 2,729. Cash sales, again, we're seeing negative 31.6% from 901 to 616. Cash sales, a percentage of closed sales, were down 24.4% from 29.9 to 22.6. Median sales price, again, increases that it's going down again. I guess it's going to be seasonal, but year on year, it does matter as well, because even though seasonality might be obviously negative from, we might be down from July, August, which is usually our peaks. The year-on-year number is what we need to pay attention to more than what's going on month-on-month. Average sales price, we're up 0.9% from $506,944 to $511,535. Dollar volume, we're down 8.6%. Median percent of original list price, we are down 1.7% from 97.6% to 95.9%. Median time to contract, we are up 90% from 20 days to 38 days. Median time to sale, we are up 33.9% from 62 days to 83 days. New pending sales, we're down 18.3% from 2,983 to 2,437. New listings, we're down 16.6% from 4,187 to 3,494. Pending inventory, we're down 14.3% from 4,121 to 3,530. Active inventory, we're up 32.9% from 8,477 to 11,269. And months of supply inventory up 40% from 2.5 months to 3.5 months. All right, so let's get into the hurricane question. Does it affect the Florida housing market? So New listings, we're going to be looking at a few things here. We're going to be comparing this historical data here, again, from the Hurricane Research Division, National Oceanic and Atmospheric Administration. I think I kind of screwed that up a little bit in the beginning, but I did the best I could, so I apologize about that. So let's do a little bit of digging here. So I'm going to just kind of shrink this over so we can get a side-by-side analysis. So let's check in here and kind of see. We're going to look at the years, the months, and then work our way up. Unfortunately, I only go to 2008, so we'll be stopping right here in this section. So August of 2023, Adalia. We go here, and what we're paying attention to is what we're doing year on year. So if you look here from August to September, there is quite a little bit of a drop from July to August, and then it falls in September. So it doesn't seem to me, in my opinion, that it affected anything. Oh wait, this is 23. I'm sorry. Let's go. Okay. So let's go here. So August 23 goes down, and then from July to August, it goes up. So I don't really see anything affecting that year. November of 22. Let's see here, from October, September to November, there is quite a bit of a dip there. So what we need to see is that a normal thing? So let's go back a little bit more further, right? October, November 21, was there anything in that time frame for 21? Nothing in Florida. So to me here, it doesn't tell me that this is just seasonality of new listings coming down. It doesn't have really much anything to do with hurricanes coming around. Let's continue up this list. September 2020, Sally. So September of 2020, again, we just kind of went sideways again. It doesn't look like the hurricane impacted anything as far as new listings is concerned. Let's keep going up this list. October of 2018, Michael. That one was a big one. So let's see, October of 2018. And then so we actually saw from September to October an increase in new listings, and it fell down and from November to October. So you did have still an increase, an increase in inventory that month, and then again, seasonality does kind of fall off. Let's move on to the next one, going further up, September of 2017. So here we actually went from, and that one was Irma. So we went from August up just a little bit in August, and then we really did take a dip in September 2017, and then came back up in October. So this year, it does look like there's a possibility that there was something, possibly good chance that hurricane did affect new listings that year. So there is some data there to back up that claim. October of 2016, we have Matthew. Let's see, we took a small dip in September to October, and then went sideways in November. So I don't think that one affected anything. It is a little bit lower though than what it normally is. It looks like it looks just a little bit lower than what the normal is, but we're going to keep going back in time to see if that actually stays constant. So let's see, moving on up the list, September. So September of 16, we have Herman. So September 16, we did, let's see, August, September, a little bit of a dip. Again, that could be just because of seasonality. Let's keep moving up this list here. It looks like we're starting to run out of choices. So yeah, in my opinion, I think that it can affect the housing market. We looked over from 23 to 2008, and it seems like the normal thing that happens is it doesn't affect it. So, 1 out of 10 times, one time out of, 2 decades of data, in my opinion, yes, it can affect it, but does it every time? No. So that's just how I'm reading that data. If you have a different opinion, you guys are looking over this, and you find something that I think I might be wrong, leave that in the comments. This is just how I'm interpreting the data. So let's keep moving on to where the charts are at. So what I want to explain to you guys is the median sales price, how that works, and why I think that the median sales price can come down, but it's going to take some time for it to come down, and I'll show you why here. So the Orlando, Kissimmee, Sanford active inventory. So this is currently what's on the market right now. So So what we have right now is the most active listings right now is in the 400 to $600,000 range. You're at 3,500 active units on the market, and then from 300,000 to 400, you have just over 2,000 units. But here's the problem: is that the lower end, if we want to get back to the median price to pull it down, we need more transactions happening in the 200,000 to the 300,000 mark. And because there's not so many units there available, unless this inventory starts to increase as well, and transactions can increase in this price range, it will pull that number down. But I will say that, let me just switch this up to the million. Then we'll get into luxury because this will also pull. So what we need to happen is for that amount of inventory to come up, so that way it can pull the median price down. Because what happens is it's what's in the middle. So with the transactions that are happening, at this price ranges, these price ranges here are going to pull that number up if the dollar amount of value is transacting most commonly in this area. So as you can see, the $1 million mark, there are pretty few units. So while transactions will happen there, that'll help pull the median up. You can see as well that the 600,000 to just under $1 million mark, there's quite a bit of active units in that. Actually, there's more units. Well, actually, that and the 300 to 400,000 unit mark, they're actually about to intersect here, so they're very close to intersecting, less than 100 units. So just want to show you how that median sales price works, because it's going to be hard if you notice back here in 2008. And let me actually go back to the other chart, because this is going to be more of what I'm trying to explain. So if you notice here, the 200 to 250,000, look how much of that inventory we had. We had almost 5,000 units on the market for sale. And then also the 250 to 300,000, prices come down because this is where the majority of the transactions were happening. And now that we're so low on that amount of inventory and that dollar amount, that it's going to be really hard to pull prices down. For the median aspect of it, like I said before, I do expect pricing pressure, price decreases happening in these price ranges more often than this. So that's why what I want to explain for the median price. And then we can see here in the Tampa Bay area, again, if you can see what color represents each dollar volume or dollar amount on those lines, you can see that while I do think that price decreases are going to happen more commonly, and as a matter of fact, I'm just going to pull that up right now. So all right, so now I'm in the MLS, and this is what I want to show you for the 7-day time frame. So just make sure what we're covering. We're covering the Lake, Orange, Osceola, Polk, and Seminole counties. So that way you can see. So those are the 5 counties that surround Orlando. I know some people think that Lake Polk isn't part of Orlando, but I consider just that far north eastern quarter part of it, just because there is inventory around the Orlando market, that is right there. I mean, you have a lot of the theme parks and everything, so I do count Polk, in my opinion, so that's what I do. So this is what has been going on. So for the past 7 days, new listings, we're at 873. What goes pending is 841. So you can see the demand is there, right? And this is actually a good sign here that we have these price decreases coming in, and this is what's getting sold. So we do have, and I'm happy to see this actually. This is a market fluctuation that I haven't seen. Sometimes this goes up above the new listings, but I cover the 7-day. I look at it every 7 days, and this is the first time in a while that I've actually seen the solds outpacing pending. So that's good. I'm happy that people are able to close on their homes and make a new, get them on the path that they're looking for. So that's good for me to see there. Now let's switch it over to the Tampa Bay market. All right, so we're changing it up again here. So the Tampa market, we're at 800, and so this is going to be the Hillsborough, Manatee, and Pinellas County for the Tampa Bay area. So right now we have new listings at 815, one pending is 731, and what actually sold is 716. But we do have the back on markets on 213. So You got to add the back on market to this. So, right there, we're over 1,000 units. So, and the same thing with the Orlando market area. When you go back, you can see that what goes back onto the market. So whatever goes back on market, you got to add to new listings because that's going to show you your overall inventory increase. Now that we covered that, I want to cover what I think is going to happen for the future of the housing market. And a lot of people don't really talk about this. It's just trajectory. We did have an increase of salaries and incomes in Florida. Like, yeah, obviously it didn't outpace inflation. It is more expensive now to own a home, to maintain a home, and that's kind of one of the reasons why I've been focusing in new construction for ever since I've started my page, because I was really worried what was going to happen in the insurance market. So I wanted to get as super knowledgeable as I could in the new construction market and see all the builders that I could see and all their product, because and it's not because I do it for you guys. I mean, we're also doing it for us as well. I wanted to make sure that us being newer to the state, that we can find good shelter. And when the insurance thing was a red flag for me, so that's why I wanted to get into it earlier than most folks were. So I want to talk about trajectory of prices. So I think that there is going to be a correction coming. If you could actually stretch this further back, you could see the trajectory from the bottom of the market was around here where we did have that hump. This time around, though, because this was such an increase and then rollover, but if you notice that this got stretched out, we went sideways a lot for 3 years now, well, 2 years, and we can see maybe in 2025 where it goes sideways. I think that prices will start coming down a tad. I think that we will have probably be about a 10 to 15% correction, possibly 20 by everything is said and done. And it'll put us. So if you can just use your imagination, if you can draw an imaginary line from here to the bottoms of every point, you'll see that we're probably about like right here with that trajectory. So we're just under the $400,000 mark. So I can see prices coming down that much a percentage, maybe a little bit more because of the insurance. What's going on here with the insurance, cost of ownership, desirability as well. So, I can see definitely a correction coming around, but as far as trajectory goes, no one really talks about that for prices, but that's something that I look as well. So I do think that prices will come down, maybe 2 to 5% next year overall to 2025. That, and then again, it might keep going down into 2026 until we hit that intersecting line, that the trajectory line versus what is actually happening in the market for that correction. We did go sideways last, so that's why I'm expecting that we will have a correction. But to have an actual crash, it depends on what you perceive as a crash. I don't see a crash; I see a correction, which is fine because it would be kind of bad that if we had a big correction, a big crash, people would lose a lot of equity, and that would also be bad for the just building wealth in general. So that's what I think was going to happen here into 2025, given where that is going to go and with insurance and all that. So, all right, yeah. So that's my 2025 prediction. Have negative prices between 2 to 5%. That's really far off. But if there is really that many investors out in this market that create those comps really quickly and they're fire sailing, because there was a big investor state, I can definitely see 5%, maybe just a little bit more. Again, it just depends on where the inventory is coming. Like I was saying, where the most amount of inventory is at, we're gonna have the most price pressure there. But because we don't have a lot of inventory towards the bottom end of the dollar amount, that it'll keep pulling that price up so long as we where we're at, kind of the 440,000. But again, that could drop down to maybe like 410 at by maybe in 26 if that keeps continuing. So it just really depends because once we start creating comps, that's actually really showing what the market's willing to pay for at those prices. So we'll see where that goes. So I would definitely say as well, what I do think is going to start happening as well. Another reason why I went to new construction, focusing on that early outside of insurance, is also because of what is, well, actually, no, the insurance is pretty much it. but actually, I think it's going to accelerate possibly with the future administration coming in, tariffs and all that. They could be obviously just a negotiation tactic, but it's if it is does happen, if tariffs are inflationary, it's just an economic thing. And not taking any sides, any political basis. I don't really care who you vote for. What I care about is who is doing what and what can we do to best mitigate risk and also possibly make money off of it. That's what my main focus is. But either way, whoever's the president, whoever's in office, and in any political position, I hope the best for them. Because either way, because they are running our country, they are running our local townships, and so we want to make sure, or I would like, to make sure that they do the best job as possible for we the people. So what I do think too as well is new construction. I think because if you've been reading a lot of the news, you've been listening to a lot of YouTubers, new home sales crashed quite a bit, especially in the Sun Belt. Down here in the South, they crashed a bit. What I do think moving forward though in 2025, if the demand and desirability does stay here in Florida, because I do see still a lot of new plates coming from Texas and California still. If that migration still continues to happen, I do think that the focus right is the hurricanes. The focus is the insurance affordability. We purchased a new home construction home. We actually signed on that 2 weeks ago, and one of the main reasons why was because of the insurance costs. We got quoted at $1,500 for the year. Can those prices increase? Absolutely, but to mitigate risk of increasing insurance costs, they're the most up to date to code for everything. So you got a new roof, so and new windows, hurricane impact windows. We got hurricane impact windows. We got an impact garage door. So those things that mitigate risk from hurricanes will keep your insurance down. And I think that we will possibly see what happens with the resale market is we'll probably get the price decreases again on that correction happening to get those houses sold. And then that money possibly rolling into new construction because what you do is you put the down payment is what it's the down payment is the big thing outside of the interest rate buy downs that they're doing, but that down payment is what is really going to determine is it cheaper to buy or is it cheaper to rent. I was looking in the Tampa Bay area. The rent for a 2-2 was going anywhere from 2,100 to 2,500. They did have some incentives where you get a couple months rent free. Me being a gearhead, I need a garage, so that was really the deciding factor for us. It was like, okay, it's gonna be, let's say, $2,200 a month for a 2-2 and a 1,200 square feet, 1,100 square feet, plus the 2-stall garage, or no, I'm sorry, 1-stall garage for 175 to $250. So at that point, we got to add that together, right? So I remember the $2,500 a month one was $250. So now we're at $2,750, and that's still not including the valet trash. If you have that, because we're looking into luxury apartments, the valet trash, the other costs associated with that versus to buy. By every time it's said and done, we put 20% down, and our monthly payment came to $2,250 for the month. The CDD was high, but the HOA is really low, which is also another reason from what I've been told is that the higher the CDD, the less of an adjustment on property taxes there will be. We'll see if they've been telling me the truth or not in the coming years, and I'm going to actually be showing you guys, I'm making a video of what it's like to buy a new construction home, why you should hire a realtor to represent you in a new construction home, because I definitely feel like it is, and this is not to steer you, this is just to inform you, because I do feel like we're gonna have a bifurcation between the resale market going down and then the new construction pricing going up. Again, due to tariffs, maybe not too much because of tariffs. It just really just depends. I guess there's supposedly talks of a 25% increase of tariffs in Mexico and Canada. And if you know anything about lumber, we do get a lot of our lumber from Canada. So if we do, obviously concrete walls here, concrete floors. Majority of the builders still do the interior walls through stick. If you watch my Onyx videos, you know that a lot of their walls themselves are actually concrete, not stick. So they build a little bit differently, which is great. But as far as the lumber goes, if your 2x4s are going up, your truss wood's going up, all that, most 95 times out of 100, producers are going to trickle that cost to the consumer. So it is an inflationary pressure, and where I think that as insurance goes up, resale prices will come down, and then new construction, that market from the money from the resale will start transferring over itself into new construction with that down payment to make the pricing affordable. And then then demand's going to start drying up also as well on the rentals as well. So then we could probably start seeing more softening coming in into the rental market. Again, reason why I've been on the deflation camp recently, but I do think short term we'll definitely have deflation. I can see possibly 2020, end of 2025, 2026, maybe because of a lag effect, maybe that the prices will start going up. With the tariffs, if they're going and introducing again, they're going to trickle down that cost to the consumer. If you do remember, I did say that if we I know that inflation has ticked up, so yeah, we did have the inflation ticking up. I did mention in my previous videos, I think it was like my September. I think it was like September housing market video, mentioning the port strikes, right? If there's a port strike, or some sort of other anomaly that could happen that could bring inflation up. So it does look like possibly, if you did watch one of my other videos, you started noticing that the 10-year was starting to go up on October 1st, which was when the port strikes did start happening. So I still am on the short-term disinflation camp. But I did think, but I did say that if something like that happened, inflation could go up. So, we'll see where it goes. But I just wanted to clarify where I said to say that I'm in the short-term camp, but I'm still in the long-term, reinflation camp in the further out 2025, maybe 2026. So just wanted to clarify that as well. So that's where I think that the housing market is going to go into the future 2025. If you have any opinion of where I think I might be wrong, where I might be right, leave it down in the comments because I'd like to get your opinion on that as well. That's just kind of how I've been thinking about how the shift is going to happen, where the velocity of money is going to go from one place and then get moved to the other. So thanks for being here again today. This is going to wrap up the October Florida housing month. Well, for October in the Orlando and Tampa market. I appreciate you being here with me today. You could have been anywhere else in the world, but you're here with me right now. Again, if you need anything else real estate service-wise, you have any questions, shoot me a DM, send me a text message. My phone number is 407-801-1661. Again, I'll be covering the Tampa Bay area here in January. I'm excited to help you guys out over there as well. And don't forget that I will still be continuing to cover the Orlando market because I'd like to have a home here as well. So you guys have a happy Thanksgiving. I hope it went well with your family. And you take care, and we'll catch you on the next video. Don't forget to leave those comments down below so I can start covering the cities and the counties and all the information that you're looking for in the comments. And I can start making more videos focusing on that. All right, take care, guys. Have a great day.